All right, what's going on? What's going on, fellas? This is Rameezy in the HU 2.0 chat, that's specifically futures. I had a couple of you guys message me and ask, how do I analyze the charts? How do I know what I'm looking at? How do I know entries and exit points? So, I want to make this video so that way you guys have a study guide to always look for when you're making the trades and kind of understand where me Fast Professor and some of the other guys that have entries and exits show you what our mindset is. So whenever you're looking at a chart, this is the NQ, basically on NASDAQ. You always want to start with the larger time frame. So what I do before even looking at any trades for entries and exits, I'm always looking at the daily. All right, because we need to know direction. That's the most important thing, is to know direction. Okay. So we see that from this bounce here, we know where the floor is. Okay, because the bounce, the market went up. Okay, so this is from the right here from March 14th until now. So we know technically the market is in an uptrend with possible resistance at this level. Why is it resistance? Well, you see where the market went up and down, and up and down. So this is points that you look for in the future to reach and give you some resistance. Okay. Now my strategy, what I do is I look for what's known as supply and demand areas. Okay. So what you have to understand is the big boys that make the markets move, meaning the guys that trade with larger size. We're talking millions of shares per day. We don't move the market. Retail traders, which is what me and you are, we don't move shit. Okay, it's all about the big boys. Okay, so these are the guys that are making these long wick moves you can see on a daily. These are also daily bars, by the way. Okay, so each one represents a day. So this is what I'm looking for is specifically what were my supply and demand areas. Supply, what that means is that this is the area where supply of shares is being shorted or getting rid of. Basically, you get that or taking profits. And then you have what's known as the demand area at the bottom of charts. And what that represents, like for instance, right here, where there's demand 4 hour, is where they're demanding the higher prices. That's where there's a lot of orders for buying. Okay, so that's just supply and demand. You can Google it, very simple to understand, not nothing very confusing. Okay, so when I'm doing my supply and demand areas, what I'm always doing, what some of the experts do, is they'll usually either use the 4 hour, or the one day I should say, 4 hour and then 1 hour, to create their supply and demand zones. How do you make those? Very simple. Okay, so if you look right here, where I have the beginning of the zone to the far left, you see you always go from the last green candle before a large pullback down when you're making your supply area. Let me repeat that. You go from where the bar is at its lowest point, which is the opening, all the way to the top of its wick, the longest point upward before it drops down. Okay? So that is how you make your supply zones. Now, if that is for supply, then guess what? That means demand is the inverse, right? So let's go down here. So this is 4 hour because I made it from a 4 hour chart. I saw demand on a 4 hour chart. Boom. You see the opposite. So this is when I saw a large jump from the pullback. This is where I create that demand zone. Okay. So what this means is there's a lot of orders still sitting here, waiting to be filled. That's why I always have it here, because it becomes a valid trade once it comes down here. Okay. One thing you'll notice is that in the market, 9 times out of 10, if a price hits the resistance or support, it will bounce in the opposite direction. Okay? Let me repeat that one more time. 9 times out of 10, when you have a support area like this or a resistance area like this, when it bounces and retests, usually it'll bounce back down. Okay? How far it goes, nobody knows. Okay, because you have people buying and selling all day throughout the trading day. You have no fucking clue. Okay, so this is how I drew my area here. Okay. So how I knew in my trade, if you guys remember, I said down in this area, go through a 15-minute, down this area, I was taking a trade around the 14590 area. Why was that? Well, if you look here, you see this falls within my supply zone. So I know the bottom of my supply zone here, because you saw how price broke through, okay? Remember, there's always what's known as a retest. That means the price in any type of market, futures, trading stocks, it doesn't matter. Commodities, usually when price breaks out to either direction, it always comes back for a retest. We clearly see that here. We clearly see that here, okay? This is your retest area. Boom. Now it broke out, and boom, now we got our retest. So I knew this was going to be a retest area. Why? Because there's still orders that haven't been filled here, okay? So this is why I knew it was going to bounce off of here. And also, usually what I do, the best trades, even for the ones, some of you that like to scalp, even the best trades to do, really, all you're doing is trading in between the supply and demand zone. If it goes up in the supply, boom, wait for it to break down, hit the bottom of the supply zone. Inversely, hell, you can do the same thing. You can go down here for the 4 hour. You can do the same thing down here. If price ever gets down to here, look for entries in this area. Usually I always do it near the bottom of the zone. Okay. It gives you coverage. That way you can have a little bit of a longer stop loss, even below here, maybe a couple ticks, to ensure that you don't get stopped out before it pumps higher. Okay. Now, there was also an example I did before of what's actually known as stop hunting. And let me go over that really, really quick. Let me show you a quick example. If I can find it here, where did I put that? Good example of what's known as stop hunting. Um, yeah. Well, this could be a good example. So right here, right where you're looking at, see how there's this wick bounce right off of this is actually the EMA 200 and went back up. What this is that whales, once again, the big hedge funds and the big boys that once again trade millions of shares, lots of shares, they'll purposely look for what's known as stop hunting. They want to get the biggest bang for their buck, okay, the biggest risk to reward, okay, that you've seen some of us post about. What they're looking for is the lowest price point so they can go in and put in large orders. This is what these long wicks are large orders. We're still looking at 15 time frames. So this is 15 minutes, large orders coming through. Okay? And this is what an order book can show you. Order books, you guys don't know, that can show you what orders are coming in. So you have an idea, okay, do I need to go long because there's a lot of orders that are buying, or do I need to go short because there's a lot of orders that are selling? Okay? That's what an order book is for. Or if you use like Bookmap, is really cool too. It's a visual representation of that as well too. Okay. And one thing also I want to point out to you guys is let's see here. I think it's a 4 hour. Yeah, mistaken. My bad. I'm kind of thinking all over the place. Okay, right here. So one of you guys had asked a couple of days ago, hey, how'd you know that what area is going to be retested? Well, what do we have here? We have 1, 2, 3 times the area was tested before breaking out to the upside. If you see that right here, these 3 areas that I'm pointing at, boom, boom, and boom. So, rule of thumb, guys, if you're looking at a chart and you see a retest 3 or more times, more than likely it's going to break to the upside. Okay, so it's going to break to the upside. Boop. And then what do we have here again, fellas? Bam. Look at the retest. Look at the retest. Same area, right here. Breakout, retest. So this is why Yesterday, if you look at this is yesterday right here. So let's go to a smaller time frame. This is once again why I said, oh, I'm looking to enter in this area. As an area has been tested, that's why I'm seeing it. Okay, so we go back to a larger time frame and see how many times this area has been tested. Let's see here. 1, 2, 3. Oh, there's a third one. Let's go. 1, 2, 3. 1, 2, 3. Boom, and the bounce happened. Okay, so make note of that. When you see price either hit support areas, excuse me, at the bottom, support areas, or resistance areas 3 or more times, expect a bounce. And you can see this throughout all charts. Okay, so hopefully that kind of gives you an idea of the reason why I got into the trades, the reason why I look at these levels. Is very, very simple. I'm looking at where price has bounced before. Okay, look at the wicks, pay attention, and remember when you're charting in the beginning, daily time frame first. Okay, you want to have a clear view of market direction. As you clearly see, market is clearly going up from the bounce. Okay, so technically, market is what? Bullish. Okay, in the short term for now. So if you guys have any questions, any concerns, once again, my name is Romizes. I'm always in the future chat. I just wanted to give this video. So hopefully it gives you guys some guidance and some knowledge and some things you can learn from. All right. Appreciate y'all. See y'all soon.